everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 20th of May, 2022, and we had another down week in the market. S&P lost about 3%, the Nasdaq 4%. Russell 2000, though, did buck the trend, as did biotechs. They've been beat up the worst and are getting a little bit of a bounce, so maybe that gives us a little hope for the rest of the market, but let's take an objective look at the charts to see where we are. This is a daily chart, of course, of the S&P 500, and you can see this blue line is the declining 20-day moving average. The green is the declining 50-day moving average, and that dark one up there is declining 200-day moving average. So we're in a confirmed downtrend. We've been saying this all year, that the path of least resistance is lower. Forget about these labels as far as, bull market, bear market. They mean nothing. The lows today came just through the volume weighted average price from the COVID low in the S&P 500, and we did see a little bit of a reversal here late in the day. We are, however, still below a bunch of the key levels that we've been observing recently, including that declining 5-day moving average. Now, oftentimes when we see a turnaround, it comes from a level where it makes a new low at an important level, it's oversold, and then reverses. So it's possible this could be the beginning of something more significant in terms of a bounce. We've had several large bounces this year, as we're well aware of. This was a chart I had posted, several weeks ago. As of May 1st, we had had an 11% bounce, a 7%, and a 9% bounce in the S&P 500. But of course, the sum of those bounces adds up to less than the decline. So we're still in a downtrend. Now, next week, again, we could bounce. I don't really spend much time at all looking for the bottom. What I notice, though, is when we are, looking at a period where it makes more sense that the average stock might continue higher, and I still don't see that yet. We're below the volume weighted average price from this gap lower. We're below the volume weighted average price from the low that was made last week, and those should be on here saved. So I'm just going to put it on there like that. So, next week we have this declining 5-day moving average. There's a couple possibilities for a turnaround. I know that's what everyone's looking for. Maybe it gaps up, pulls back a little bit, and then continues higher on Monday. Or the other option is it rallies up towards that level, pulls back, and then creates a higher low, and then continues higher. And then, of course, we have to be aware of other volume weighted average price levels and moving averages from higher time frames to see if it does, in fact, mean a turnaround, or this declining environment will continue to happen. We saw a lot more, stocks get brought down hard this week. Cisco Systems, a lot of people will call it a good stock, good company, but it's a terrible stock to own. Walmart, terrible move right here. This is why you don't buy the dip. There's no such thing as down too much. That first day, the early buyers who rushed in thinking it was at a discount and a bargain at 137, they lost 20 points, from there. Just don't make those mistakes. You can look at these volume weighted average price levels for potential levels of support, and that's all they are. I never look at a volume weighted average price and say that's where I have to buy the stock or the market or anything else. It's where I say time to look at shorter term time frames. Do we have evidence here that the buyers are in control? It got back above today's volume weighted average price. It's still below the week to date volume weighted average price. It still has a lot to prove. The Nasdaq is in worse shape. This market came all the way down to the volume weighted average price from the low in 2018. That was the low in December of 2018. I remember that day because I lost a lot of money that day. Fortunately, I had held and came close to the bottom on that purchase. It was a terrible strategy, but one of the times I fell for buying the low, thinking we were going to get, what I thought was going to be the low, rather. I didn't buy what I would think might be a low in here. We got a couple of positive things in that, it broke below this prior low and then came back up through it. But that doesn't mean it has to turn around. The market doesn't have to do anything. It is still in a bearish environment below the 20, 30, 40, 50 week, day moving average, the 20, 30, and 40 week moving averages. We're down to, again, levels not seen from a volume weighted average price level from the lows of 2018. By the way, I'm recording this on my screen with a large chart here, very large. For some reason, as many people have pointed out, for some reason, YouTube's lately been uploading my videos in 480p. I do notice, though, that after a couple hours, once they've had more time to process at YouTube, there is a higher uh, uh, level of viewing available. What am I trying to look for? The word there. But anyways, so give it a little bit of time if the resolution bothers you, and if it isn't fixed this time, I don't know what to do. Maybe someone with some technical expertise could give me some advice rather than just point out problems. As the Iron Lady Margaret Thatcher used to say, "Don't bring me problems, bring me solutions." So, anyways, the Russell 2000, as noted, did make a little bit of a bounce here this week, but it's still ugly looking here. We've got this daily chart. Still, we came down to the prior band of resistance. We've spoken about that numerous times. That resistance so far held as support last week. We got, a slightly higher low. We are below a declining 20-day moving average, declining 50-day moving average, the volume weighted average price off of this high. So if this market's going to turn around, what might that look like? Well, we'd have to look at this prior support that acted as resistance. Maybe this market does something along the lines of this and creates some higher lows, and then gets going higher. But again, we've got a primary downtrend. The bigger picture on the daily and the weekly time frame says sellers are in control. We've found a level of prior resistance, which we're starting to bounce from. Will it turn into something bigger? I can only tell you in hindsight. Anyone else who tries to tell you that this is the bottom, they don't know. They're just taking a guess. What we need to see is slowly on shorter term time frames, starting from from the 1 day. Did the buyers regain control? Can they maintain control from this low in here? Can they take and maintain control from this level? Do you think it's a coincidence that it rallied right up to the volume weighted average price from the low last week? So maybe on Monday we see something like this. It pulls back to what will be the 2-day volume weighted average price, builds a little bit of energy, breaks above this volume weighted average price, maybe runs into the 5-day moving average. Then on Tuesday, the 5-day moving average starts to flatten out as we replace this data. And slowly over shorter term time frames, it starts to build a pattern of higher highs and lower lows. Longer term moving average to flatten out. That's going to take a lot of time still for the Russell 2000. Just don't be in a hurry to buy, especially the name brand stocks that you think are on sale. Again, go back to Walmart, go back to Target, TGT. SJM is Smuckers. And, 2 weeks ago, people were saying, hey, the food stocks are the defensive names. This is where you have to be because that's where money goes in a defensive market environment. And, the weekly chart here actually looked pretty positive, but things happen quickly in this market. And when they break support and make those lower lows below a declining 5-day moving average, get the hell out of the way. Be out of the way when this happens. Look to maybe purchase if you're going to purchase in here. Buy it here, raise your stops, get stopped out, and avoid this carnage. It's possible to avoid all that. Again, I want to point out, I don't mention that I have a subscription service often here, but I am running a sale through the end of this month. You get a lot for it. You've got 3 daily videos. One is an end-of-day video similar to this, but a lot shorter. And then another one with swing trade ideas each and every day. Then at about 11 a.m. Eastern, I've got about a 4-minute midday video to update all of those positions. I do webinars every other Monday where subscribers interact. Anyways, if you add up everything you get here, it's about a $2,045 value. It includes a one-on-one 30-minute webinar with me, the extra webinars, etc. It's all for $799. It's only good through the end of this month. Please go to alphatrends.net to find that. You can see it right here on the homepage where it says May 2020 special bundle sale, and that's the end of my sales pitch. So back to the biotechs, they bounced a little bit, but as we know, these guys have been the poster child for a downtrend. They have consistently run into problems with trend lines, with moving averages, with everything that's declining down on them. And we see now they're at the declining 20-day moving average. On a fair, slightly positive, you could say that maybe this is a higher low and this could make a higher high, and that might pave the way for a rally up to the declining 50-day moving average. But recognize in all of these markets, the primary trend is still lower. Any rally that you get in these markets should be treated as a rally within a downtrend, meaning if you're trading aggressively, it's fine to trade them, but don't think that you've caught the bottom. Most likely you have not caught the bottom in these names, and there can be big rallies that, make you feel really good about 10, 15% returns in a short period of time. Protect your gains when you get them, regardless of what the industry is, whether it's energy. A lot of people are looking at energy and thinking, this is going to take their accounts back to even, or, to new highs, or whatever the case might be. Don't make the same mistake with energy names that you made with growth names. Eventually, these stocks will decline as well. It happens in every single market, in every single country, in every single stock that there is, period. There is nothing immune to the four stages of cyclical money flow through the markets on every single time frame. So the main message with energy is it continues to be an uptrend. It's been finding buyers at the year-to-date volume weighted average price. It's making higher highs and higher lows. Just protect your gains. Don't give them away. Financial stocks are still in a downtrend. They're coming very close to that volume weighted average price from the COVID low. The primary trend remains lower. It's still below a declining 5-day moving average. Maybe next week we get a more vigorous bounce that can hold on for a little while. If you really want to know what I'm thinking on a daily basis, again, alphatrends.net. Let's take a quick look at Bitcoin. Bitcoin was on the edge of a breakdown here on the daily chart. You can see here on the right, actually, I've got a 4-hour time frame, and it broke below this volume weighted average price. And on the daily time frame, I don't know, got it. On the daily time frame, we're still below, the year-to-date VWAP, the volume weighted average price off of this peak, the all-time high. I think we're likely to test the volume weighted average price from the 2019 low once again. And if that fails to hold, then I think it's highly likely we come down to the volume weighted average price from this peak near about 21,000. It's still in a primary downtrend. I get hate every time I mention something negative about Bitcoin. I don't dislike Bitcoin. I dislike anything that's in a downtrend from a standpoint of, do I want to own this? No, I don't. I don't want to own things that are in downtrends, and neither should you. That's all of your time I'm going to take with this. Have a good weekend. Thanks for tuning in. Please give it a like if you like it on YouTube, and talk to you next week.